Welcome back to the channel, the $25 Investor. This is the place where we believe you do not need to start with thousands of dollars to build real wealth. You can start with just $25 a week. That is the power of consistency, discipline, and long-term investing. Today, we are talking about Eli Lilly and Company, ticker symbol LLY. Many people think a stock like LLY is too expensive to begin investing. But here's the truth. You do not need to buy a full share. With fractional investing, you can start with just $25 every week. Let's break this down. $25 per week equals $1,300 per year. Over 5 years, that becomes $6,500 invested. Over 10 years, $13,000 invested. The key is not how much you start with. The key is how long you stay invested. Compounding works quietly in the background. When your investment earns returns and those returns earn returns, the growth begins to accelerate. At first it feels slow, but after 10, 15, and 20 years, the numbers begin to multiply in ways that can completely change your financial future. This channel is about making the numbers work for you. Today we will show you exactly how investing $25 a week into LLY could meaningfully impact your long-term wealth. When you invest $25 per week into Eli Lilly, you are building a disciplined investment habit. $1,300 per year may not sound like a lot. But consistency turns small weekly investments into serious capital over time. The strategy here is simple: dollar cost averaging. You invest the same amount every week regardless of whether the stock price is up or down. When the price dips, you buy more shares. When the price rises, you buy fewer shares. Over time, this smooths out volatility. Eli Lilly has delivered strong historical growth. By focusing on steady weekly investing instead of timing the market, you remove emotion from the process. You build wealth automatically. The important thing is time. 1 year is just the beginning. 5 years starts to show results. 10 years begins to show transformation. 15 to 30 years is where compounding becomes life-changing. Eli Lilly and Company is one of the largest pharmaceutical companies in the world. The company develops medicines for diabetes, obesity, cancer, immunology, and neuroscience. One of the major drivers behind Eli Lilly's recent growth is its leadership in diabetes and weight loss treatments. Demand for innovative metabolic treatments has significantly increased worldwide. This creates strong revenue growth potential. Pharmaceutical companies operate with high research and development investment. However, when a company successfully brings blockbuster drugs to market, the profit margins can be substantial. Eli Lilly has demonstrated the ability to innovate, secure regulatory approvals, and scale globally. Investors look at revenue growth, earnings growth, pipeline strength, and competitive advantages. Eli Lilly has shown strong earnings expansion over the last decade. Its ability to reinvest profits into research strengthens its long-term outlook. When you invest in Eli Lilly, you are investing in medical innovation and long-term global healthcare demand. To understand performance, let us compare Eli Lilly to the S&P 500 through the ETF SPDR S&P 500 ETF Trust. The S&P 500 3-year growth rate is 20%. The 5-year growth rate is 13.65%. The 10-year growth rate is 15.72%. Now compare that to Eli Lilly. Eli Lilly 3-year growth rate is 46.61%. Eli Lilly 5-year growth rate is 39.49%. Eli Lilly 10-year growth rate is 32.14%. Eli Lilly has significantly outperformed the broader market across all 3 time horizons. While the S&P 500 provides diversification, Eli Lilly delivered stronger growth during these periods. However, higher growth can also mean higher volatility. Investors must understand both opportunity and risk. This video is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. The examples and opinions shared in this video are based on personal research and experience. Investing involves risk, and past performance does not guarantee future results. Always do your own research or consult with a licensed financial professional before making any investment decisions. Let us take a closer look at the growth rates of Eli Lilly and Company and understand what these numbers really mean. The 3-year annual growth rate is 46.61%. This means that on average, the stock increased by 46.61% per year over the past 3 years, compounded annually. That is very strong performance in a short time frame. The 5-year annual growth rate is 39.49%. Maintaining nearly 40% annual growth over 5 years shows sustained momentum, strong earnings expansion, and high investor confidence. The 10-year annual growth rate is 32.14%. This number is especially important because it covers a full decade, including different market cycles. Delivering over 30% annual growth for 10 years reflects long-term strength and consistent performance. When you look at all three timeframes together, you see a pattern of powerful growth across short, medium, and long-term periods. While past performance does not guarantee future results, these numbers demonstrate why Eli Lilly has attracted long-term investors seeking strong compound returns. Now let us clearly break down what your actual capital contribution looks like if you invest $25 every single week into Eli Lilly and Company. Before we even talk about growth, returns, or compounding, we must understand the foundation: how much money you personally put into the investment over time. $25 per week may sound small. It is the cost of a few coffees, one fast food meal, or a streaming subscription. But when you stay consistent, the numbers begin to build in a powerful way. Let us calculate it step by step. 1 year equals 52 weeks. $25 multiplied by 52 weeks equals $1,300 invested in 1 year. Now extend that timeline. 5 years of investing $25 per week equals $6,500 total invested. That is your own money contributed consistently without increasing the weekly amount. 10 years equals $13,000 invested. 15 years equals $19,500 invested. 20 years equals $26,000 invested. 25 years equals $32,500 invested. 30 years equals $39,000 invested. Notice something important. Even after 30 full years, your total personal contribution is only $39,000. That shows you how small weekly habits build meaningful capital over time without overwhelming your monthly budget. Now let us go deeper into what happens when you invest $25 per week into Eli Lilly and Company and allow compounding to work over time. Your yearly contribution is $1,300. Over 5 years, you personally invest $6,500. Based on the projected growth rate, that $6,500 grows to $15,664. That means your gains are more than $9,000 above what you invested. In just 5 years, your money has more than doubled your original contributions. At 10 years, you have invested $13,000 total, but your portfolio value grows to $81,597. This is where compounding starts accelerating. Your gains are now more than $68,000 above what you contributed. At 15 years, you have invested $19,500. Your portfolio grows to $206,966. Notice that the growth between year 10 and year 15 increases dramatically. This is the snowball effect. At 20 years, you have invested $26,000. Your portfolio value grows to $362,868. At 25 years, you invested $32,500, but the value grows to $466,141. At 30 years, you invested $39,000 total. Your investment grows to $580,237. That means more than $540,000 comes from growth, not your own contributions. The $50 per week investment strategy. When you double your weekly contribution to $50, your yearly investment becomes $2,600. After 5 years, you invest $13,000, and your portfolio grows to $31,329. Your gains already exceed $18,000. At 10 years, you invest $26,000, and the value grows to $163,194. The compounding effect becomes significantly stronger. At 15 years, $39,000 invested becomes $413,932. At 20 years, $52,000 invested grows to $725,736. At 30 years, $78,000 invested grows to $1,160,475. You cross the $1 million mark simply by doubling from $25 to $50 per week. $100 per week investment, the long-term power of compounding. At $100 per week, you invest $5,200 per year. 5 years, $26,000 invested grows to $62,659. 10 years, $52,000 invested grows to $326,388. 15 years, $78,000 invested grows to $827,865. 20 years, $104,000 invested grows to $1,451,472. 30 years, $156,000 invested grows to $2,320,951. Your contribution is modest compared to the multi-million-dollar outcome created by compounding. $150 per week investment. At $150 per week, your yearly investment is $7,800. 5 years, $39,000 invested grows to $93,989. 10 years, $78,000 invested grows to $489,583. 15 years, $117,000 invested grows to $1,241,798. 20 years, $156,000 invested grows to $2,177,208. 30 years, $234,000 invested grows to $3,481,426. $200 per week investment analysis. At $200 per week, your yearly contribution is $10,400. 5 years, $52,000 invested grows to $125,319. 10 years, $104,000 invested grows to $652,777. 15 years, $156,000 invested grows to $1,655,731. 20 years, $208,000 invested grows to $2,902,944. 30 years, $312,000 invested grows to $4,641,902. $250 per week investment. Consistency today creates financial freedom tomorrow. At $250 per week, your yearly investment is $13,000. 5 years, $65,000 invested grows to $156,649. 10 years, $130,000 invested grows to $815,972. 15 years, $195,000 invested grows to $2,069,664. 20 years, $260,000 invested grows to $3,628,680. 30 years, $390,000 invested grows to $5,802,378. $300 per week investment analysis. At $300 per week, your yearly investment becomes $15,600. 5 years, $78,000 invested grows to $187,979. 10 years, $156,000 invested grows to $979,166. 15 years, $234,000 invested grows to $2,483,597. 20 years, $312,000 invested grows to $4,354,416. 30 years, $468,000 invested grows to $6,962,853. The lesson across all these scenarios is clear. The higher your weekly investment, the faster compounding accelerates. But even the smallest starting point, $25 per week, has the power to grow into substantial wealth when given enough time. Conclusion. As we wrap up this deep dive into investing in Eli Lilly and Company, let us step back and look at the big picture. The most important lesson from this entire breakdown is not just the numbers, it is the principle behind the numbers. Small, consistent investments made over a long period of time can turn into life-changing wealth. When you invest $25 per week, you are not trying to get rich overnight. You are building a system. Over 30 years, your total personal contribution is only $39,000. Yet based on historical growth rates, that amount has the potential to grow to more than $580,000. That means the majority of the final value comes from growth and compounding, not from your own pocket. When you increase your weekly investment to $50, you cross the $1 million mark over the long term. At $100 per week, the potential reaches over $2 million. At $200 or more per week, the projections grow into multi-million-dollar territory. The pattern is clear. The earlier you start and the longer you stay invested, the more powerful compounding becomes. Time in the market is more important than timing the market. Consistency beats emotion. Discipline beats speculation. However, remember that investing always involves risk. Stock prices move up and down. Growth rates can change. Pharmaceutical companies face competition, regulation, and market volatility. That is why long-term patience and diversification are important parts of any investment strategy. The key takeaway from today's video is this: you do not need a huge starting amount. You need commitment. You need consistency. You need time. On this channel, The $25 investor, we focus on showing how ordinary people can build extraordinary wealth by investing small amounts weekly and allowing compound growth to do the heavy lifting. In our next video, we will explore other investment options such as Invesco QQQ Trust, SPDR S&P 500 ETF Trust, Vanguard S&P 500 ETF, Anchetondidior, Vanguard Dividend Appreciation ETF, Vanguard Information Technology ETF, and VanEck Semiconductor ETF. We will compare their long-term growth rates and see how $25 per week could perform in each one. If you found value in this breakdown, please like and subscribe so you can continue learning how to turn small weekly investments into meaningful financial freedom. Thank you for watching, and remember, start small, stay consistent, and let time make the numbers work for you.